Last week, we heard from some traditional suppliers of liquidity, the banks and credit unions. And this week, we have the opportunity to gain insights from leaders in equity investment and financial technology sectors. We'll learn how they've been able to support, or that they have been able to support or have been prevented from supporting Canadians during this crisis, and ways in which they can help jumpstart a recovery led by small business in Canada. Our speakers today are Janet Banister, the Managing Director of Real Ventures, Andrew Graham, the co-founder and CEO of Borrowell, and Som Seif, President and founder of and CEO of Purpose Investments. As you know, I'm passionate about the need for Canada to become even better at helping entrepreneurs in every community across the country turn their ideas into opportunities, jobs, and prosperity that benefit us all. I believe that these three panelists will do a tremendous job of illustrating just how much opportunity is available to us even during these very challenging times. COVID-19 has dramatically accelerated the digitization of our economy. However, so far, the federal government's response has yet to unlock the massive capacity and potential of our digital entrepreneurs, especially in the financial technology field. I hope that you're going to leave this session with three things firmly in your mind. First, that Canada is creating a globally competitive technology and innovation firms in every corner of our country, but we must work much harder to utilize them in the COVID response. Secondly, we live in a disrupted world, and that our largest companies and traditional employers will quickly find themselves being disrupted by global competitors if we continue with policies that ignore global market realities. And thirdly, how quickly we can create opportunities, jobs, and prosperity if we actively invest in technology and innovation, change government procurement policies so that they do not always favor traditional players, and embrace the regulatory changes needed in our increasingly digital world. I believe that our speakers will help us to better appreciate the enormous talent and capacity that is available to help Canada recover from the unprecedented economic and social shock of COVID-19. So I want to thank all of you in advance for taking the time to share your experience and knowledge with us today. I want to get started with Janet Bannister. Janet is the managing partner of Real Ventures. Janet is the leading partner in Canada's largest and most active venture capital investment firm. Real Ventures has helped more than 280 high-growth companies across Canada to grow into international businesses. And these companies have enterprise values in excess of $6 billion. Prior to becoming a VC investor, Janet created Kijiji, which I've used, I think most of us have, to sell our previously loved treasures. And prior to that, she was in Silicon Valley, where she helped eBay become a mainstream marketplace, expanding from its narrow focus on collectibles. Janet, I'm going to hand things over to you, and I think Gabby's going to turn on your slides.
Wonderful. Thank you very much, Colin. Thank you so much for inviting me, and to everybody who is on the line. Hello, good day, and thank you for being here. It's a real pleasure to be here. So as Colin laid out, I'm going to chat about a few things. So really, for Canada, I am a very strong, passionate Canadian, moved back from Silicon Valley to Canada because I wanted to be part of Canada's great technology evolution. And so I believe firmly that this is our time, and we need to embrace the opportunity to win as a global tech powerhouse. So if we can move to the next slide. So 4 key points I'd love to chat with you about. First of all, over the last 5 years, Canada's tech sector has grown rapidly, laying the foundation for a transformation in Canada's economy. I'll share a couple of quick stats with you on that. Secondly, this is a pivotal point for Canada's tech sector, and we can either choose to seize this opportunity and build on our advantage, or we risk falling behind. Thirdly, one of the keys to determine which way we will go is whether we have sufficient funding for our high potential early stage technology companies. And finally, in order to ensure that capital, investing in venture capital is an extremely capital efficient way to provide this funding. So if we could go to the next slide. Just a couple of stats here. Canada is producing great tech companies. If we look at the investment in Canadian tech startups, over the last 10 years, we have seen a 3x growth. You can see some of the names, many of which you will recognize on the right-hand slide of this page. I can tell you as a venture capitalist, there is not a week that goes by when I do not get an outreach from a US or based venture capital firm that contacts me and says, we want to do more investing in Canada. We have heard great things about Canada. When I go to Europe, I meet people who say, we want to do more in Canada. We've heard great things about Canada. Our reputation as a global powerhouse to produce great technology companies is growing. And if we can flip to the next slide, please. Why is Canada growing so quickly? Why are we on the global radar screen? A couple of things. First of all, the growth in AI. We are global leaders in AI. We have long been global leaders in AI. Jeff Hinton and Yoshua Bengio, two of the founding fathers of AI, come from Toronto and Montreal, respectively. Right now, Toronto-Waterloo corridor has the second highest density of startups anywhere in the world and the highest concentration of AI startups anywhere in the world. Recently, by a third party, the Toronto-Waterloo area was ranked as the best overall North American ecosystem in which to build a tech company. The number of tech companies has grown 10x in the last 8 years, and in both 2018 and 2019, Toronto created more new tech jobs than Silicon Valley, Seattle, New York City, and DC combined. So again, huge growth. Next slide, please. Why is this important? The tech sector is of a critical importance to Canada for a couple of reasons. First of all, strong tech companies are needed to ensure that our traditional industries are competitive. So if you think about our traditional industries of manufacturing, banking, retail, all of those industries require the technology, much of which is coming from young Canadian companies in order for them to remain globally competitive. Secondly, technology companies have a greater potential for rapid growth. If you look at the stats from 2009 to 2018, software companies in Canada grew annually 14% year over year versus a 2.3% across all industries. We know that technology companies are where the future of Canada is. Another data point, tech companies are much more export focused. On average, 90% of their revenues are derived outside of Canada. And finally, tech company jobs pay between 50 and 100% more on average than jobs in other industries. If we could go to the next step. So we know that the tech sector is big, or is growing quickly. We know it's important. Where does that bring us to today? This is an absolutely pivotal time for Canada's tech industry. You got this little cartoon here. We are seeing, and we see this every day with our companies, that COVID is creating a powerful force for more tech-driven processes. And whether that is automation of financial processes, whether that's automation on the manufacturing line, whatever that is, this is a time when technology is being adopted by large companies and small companies faster than ever before. The second major thing, which we have been seeing over the last 4 years and is only accelerating, is that the US political environment is creating more and more time, money, and attention is going into Canada as globally people want to focus on Canada rather than the US as their North American hub. And we are seeing top talent globally, as well as financial interest, customer interest in working in Canada and working with Canadian companies. And finally, unless we invest, as we think about all of the money that Ottawa and other governments are investing to help us through this tough time of COVID, is during this time, if we are not investing in future growth industries, then any recovery will be limited and short term. Finally, just in terms of, okay, so we know technology is important. We know that Canada's been growing well. We know we need to support our tech ecosystem. What is the best way to do that? Here is an example to show the leverage that venture capital can get. And I've used numbers from our seed funds because that is the information that I have access to. So I view this as an example of how Real Ventures works. If I look at our funds that we raised in 2011 and 2014, that's the top box here, BDC invested $30 million in Real Ventures 2 seed stage funds. So I have on the right-hand side, you can see cumulative leverage, $1. With BDC as a foundational investor, we went on and raised $140 million across those 2 funds to invest in early stage technology, Canadian tech companies. So that $1 went to $4.70 that went into these early stage Canadian tech companies. Then what happened? Real Ventures, we typically are the lead investor. We led rounds by leading rounds, catalyzing the investors. Our companies in those initial rounds from that $140 million, at the same time, they were able to raise $250 million. So, almost doubled the amount of money they were able to raise in their initial amounts. Makes the cumulative effect $8.30. But then if you look at what happened to those companies, many of those companies are still growing. So this is just a snapshot in time. Those companies went on to receive an additional $1.5 billion in money. Those companies are now today worth over $6 billion. 98% of them are selling internationally, and they have created over 5,000 high-paying, highly skilled jobs in Canada. So that's sort of how you get the from $1 goes to $200 in value. And now I'll turn it over to, I think Andrew's next for the next overview. But thank you very much and looking forward to having a good discussion.
Thanks, Janet. I can't wait for you to be asked questions, and you certainly do a great job of showing the potential that is there for our country. Andrew Graham is co-founder and CEO of Borrowell. I first met Andrew through his co-founder, Eva Wong, about a year ago. They've built Borrowell in 6 years and now have over 1 million Canadians that trust them to make better decisions and to help those Canadians make better decisions about their bills and obligations and to improve their credit. Their digital tools personalize information in a manner that makes it easy to make the right decisions, and it democratizes and simplifies the complexities of personal financial management. Andrew is a Canadian financial technology leader, or fintech leader, and a member of the Canadian Council of Innovators. And Andrew, I'm really glad you're here today. Thanks.
Well, Senator, thank you so much for having me, and it's a pleasure having the opportunity to present to such an accomplished and important audience. What I want to talk a bit about today is some of the things that we're doing as a company. I think Senator Deacon wanted to share with this group what fintech can achieve, and I'm happy certainly to talk to our story as one example of that among many in Canada. So if you go to the next slide, what we do is we really help Canadian consumers find financial stability and enhance their sense of financial stability. You can go to the next slide. The way we do this primarily is we were the first company in Canada to offer consumers access to their credit score for free. Back in 2016, when we launched this initiative, it was really essentially impossible to get your credit score and your credit report for free without having to show up in person or send a letter by mail to the credit bureaus. And we did a deal with Equifax and really democratized the credit scoring system, which, as I'm sure many of you know, is such a crucial part of the consumer financial system in Canada. About half of Canadian households live paycheck to paycheck. That's a statistic from the days before COVID. We know that many households are facing increased levels of financial insecurity now, increased levels of financial stress now. And so there's, I think, many people have an expectation that number will rise. And if you're a member of one of those households living paycheck to paycheck, being able to access credit to be able to, buy a house perhaps, to move from renting to owning, to be able to buy a car, credit and having access to credit is such an important part of the financial well-being of many individuals and families, yet there was no way to get a sense of what your credit score was. So what we did is we launched with Equifax in partnership with them an initiative where you could come to Borrowell and sign on, get your credit score for free, and then we give you advice, like you can see here on this slide, about what's impacting your credit score and how you can improve it. And then the way that we make revenue from all this is then we have virtually all of Canada's consumer-facing financial institutions, including the large banks, offering their products on our platform. So we can say, okay, given your financial profile and your income, here's the best savings account for you, or here's the best credit card for you. And we really give consumers, I think, the confidence to be able to access financial products that are going to be the best fit for them and avoid predatory products, of course, like payday loans, for example. I'm really proud that we've recently launched our newest product, if we go to the next slide, and it addresses, I think, a very significant challenge, which is that increasingly Canadians are missing bill payments. We know that Canadians are financially stressed, and the occurrence of late or missed bill payments has actually grown by 50% over the last 2 years. And this is all pre-COVID. So again, this is pre-COVID. There's lots of reasons to believe that this is getting to be worse and more challenging. And if you go to the next slide, this is a quote that we heard from one of our users, one of our members whom we spoke to about this, who talked about paying $1,000 in bank fees, and that understanding predicted balance and upcoming bills would save a lot. Some of the consumers we spoke to when we were trying to figure out how to tackle this problem had large calendars printed out on their fridges where they would record when bills would be coming due, like, hey, Netflix is next Monday, rent is coming out next Wednesday, and so they would have all that on the fridge and then would understand when they were getting paid so they could try to make sure there wasn't going to be any overdraft, because they either didn't have access to that or it was going to cost them a lot of money in bank fees. So if you go to the next slide. So we've really recently launched a product called Borrowell Boost, and for a monthly subscription fee, it's $5 a month. You can link Borrowell to your bank account with any major financial institution in Canada, and then we crunch through the data. We use our analytics to crunch through that data to be able to help consumers understand what bills are coming up and if they're likely to be in a situation where they don't have enough money. And then as part of that, we've included a $75 interest-free loan that they can access for days or weeks at a time to help try to bridge from one paycheck to the next without having to resort to high interest rate products like a payday loan. Because we can see a history of payment very clearly in the banking data, we're able to do that with a lot of confidence, and we're able to do it, as I said, without any fees or interest charges beyond the monthly subscription for using the service. So we're really proud of this, and we think it's an important response to the challenge that many consumers were facing before COVID, and in fact is even more important as we get into these times of consumers having to manage cash flow when there's either less work, fewer hours, or indeed unemployment. So we think this challenge of helping Canadian families get a hold of their finances and feel more security about their finances is very worthwhile, and we really think it's a problem that can be helped to a large degree by technology. And that's why we have well over 1 million consumers signed up today. That's a number that's growing by thousands and thousands a week. There's real virality to this program, and we're just so excited for what lies ahead and the growth that lies ahead. Despite all of that, and if we go to the next slide, it certainly can be frustrating sometimes as a financial services entrepreneur, because there's so much opportunity that we see in Canada, and so much opportunity for Canada to be a real winner in fintech. If you go to the next slide, we have such strong financial institutions. Of the world's 60 largest banks, we have 5 that are Canadian. This number was even higher, or there was even we were 5 on even a much smaller number just a few years ago, coming out of the financial crisis when we had some of the strongest banks in the world. We still have very strong banks. We also know we have such a strong tech sector, and Janet's just spoken very eloquently about that. We have so many strong technology companies. We have such a strong financial services sector. Fintech is a place where we should be winning, and I believe we will win. Today, there are actually no billion-dollar Canadian fintechs out of the 60 in the world, but certainly I'm determined, and many of my colleagues who run Canadian fintechs are determined to change this. Maybe just sort of a last thought about why I think fintech is so badly needed, why we need more financial innovation and competition in this country. If you go 2 slides forward. I really think fintech could be a big help with the COVID response. This is a chart from CD Howe looking at small business lending as a percent of total business lending and on a percent of GDP basis. Canada's the bottom row there. You can see we just don't do a lot of small business lending as a country. And I think there's a huge role that fintech could be playing to tackle this. I know Som, our next speaker, is in this business directly and knows certainly better than I do how accurate this is. Maybe next slide, please. And just as a comparison with the US, where there's been extensive use of fintechs have originated 2.5 billion in PPP loans, and some of it from their own balance sheets. In other cases, processing loans on behalf of banks, because the view was that fintechs can move more quickly, and so they've structured these partnerships with banks to allow them to get dollars out the door. And I think all of this shows that if what we really want to do is help the recovery, help speed up how consumers and small businesses are able to get back to building great livelihoods here in Canada, we'd be crazy not to better engage our fintech companies. And that's certainly something I'm thrilled to talk to you all about today. Thank you. Thanks for the time.
Thanks very much, Andrew. And you've just done a great job of showing the sort of customer value that can be that innovative enterprises can bring, that accelerates them ahead of where the status quo has them. And you've, I think, laid the groundwork quite well for Som Seif, who's our next speaker, founder and CEO of Purpose Investments, I should say. And it's an innovative investment company with more than 8 billion in assets under management. He was a leader in creating exchange-traded funds in Canada, which dramatically reduced investor fees while not compromising returns. So he's very focused on, again, customer value. What I was most struck by is that his was one of the very first firms globally to embed ESG, or environmental, social, and governance principles, into its investment strategy. It shows the forward-looking approach that he takes on and lives through the companies he builds. His company also owns Thinking Capital, which is a 14-year-old fintech lender based in Montreal with over $1 billion in loans outstanding with Canadian small businesses. So I'd like to hand things over, if I could, to you, Som. Thank you.
Thanks, Colin. And first off, thank you for inviting me, as well as to Howard and to all of you. It's a true pleasure to be here. It's an honor. It's also a reason to put on a suit for the first time in months. So, thanks for doing that, although it doesn't fit as well. Look, I wanted to start with maybe giving you a little bit of perspective of the experience that I've gone through and why I see such an interesting and important opportunity, and the reason why we do what we do. I've had a vision for financial services really driven around the customer at all times, and how do you innovate on their behalf using their journey, which is actually, in fact, as you know, one of the most important things to improve the lives of Canadians, especially those who have, for the most part, been taken advantage of or have been most underserved. And it's what's driving me as an individual, as an immigrant to this country, and someone that is so passionate about a thriving Canadian economy, but more importantly, a thriving technology sector and a strong underpinning from financial services. I believe in great outcomes. My first business, as Colin talked about, was a company called Claymore, and the principle of this was, at a time over the last 20 years, as you know, the Canadian financial services investment management companies had been criticized for their high fees. I came at it from the perspective of how do you build a better investment company for Canadians, and I built that really helped drive the low-cost exchange-traded fund industry in Canada. My second company actually is one that Janet talked about, is a company I co-founded called Wealthsimple. And this is a business that is a very important business. It's revolutionizing the way we service one of the most underserved retail investors, and that is the small investor, the young investor. And we built that business as a global leader, an innovator in sort of how to think about how Canadians will invest and bank in the future from a kind of a banking platform, non-regulated banking platform. I think it's really important. But what drove that was a focus on how to think about unit economics of how to run money for small investors. That is the challenge that many people face today in our industry, is the unit economics of our industry. And then finally, my current business that I run is a company called Purpose Financial. which is innovating across the financial services industry in both in asset management, wealth management, and small business lending and banking. And we have a very strong vision for that last component, which I'll spend some time talking about. I've always believed in the intersection of financial services and technology as being an unbelievably fantastic opportunity. You know, the industry has a lot of legacy infrastructure and technology. It's designed around products, not around customers. It's an industry, as I talked about around economics, is driven by average economics versus unit economics. And this is because the margins have been so attractive for the Canadian financial services player. And then they've enjoyed it for so long. But the real implications of this is that it leads to this assumption that larger clients, larger enterprises are better and make more money for us than smaller. And therefore, you know, doing small finance or microfinance is a waste of time and it's expensive, or you have to charge high fees to ultimately make it work. And I think that's a fallacy that the industry has kind of fallen into. You know, it's also an industry that's been designed around, call it products and services versus designed around customers and their needs and their journey. And, you know, I think this is a really important one. And the last one is, you know, I think it's an industry that, you know, has the messaging, the experience. There are good experiences, and many people, if you're a super prime or a prime customer or a medium or large thriving enterprise, you do fine. You're going to get all the services you need. But if you're a customer that needs your help at a moment, you generally are going to be treated and pushed aside. And I think that's where we need to change our mindset. This is an extremely important industry that needs to be pushed. It can fall into legacy, it can fall into complacency, and we need to push it. And that's where players like ourselves become really, really important because we drive this industry to be better. You know, today at Purpose, we manage over $10 billion in assets. And I think, as Colin said, one of our core businesses around the small business banking and lending future has lent over $1 billion of capital to small businesses across this country. And that's in micro lending, from anywhere from $5,000 loans to $500,000 loans. On average, our loan sizes are around $50,000 to $60,000. So that's a lot of loans. And what I always say is there isn't a postal code in this country or a type of business that we haven't lent to in our experience, in our history. And that's a very important set of data and understanding of our customers. You know, we've been building this business with a kind of very clear vision to create the future of how small businesses will interact with financial services. It's a truly mission-oriented focus because we look at the economy, and you know, one part of the economy that is most underserved is the small business. It's something that we all talk about. We all know it. We know that they, you know, have been kind of pushed aside for the most part. But when you look at companies that employ less than 100 people, that have revenues under $5 million, this group has been ignored. And it will continue to be ignored unless we do something about it. And you know, I think as I go back, it's largely driven by the principle of average economics, unit economics, microfinance, all these other things. These are businesses that aren't cash rich. They generally need capital. Their number one approach is to require capital. And they don't have credit ratings, as Andrew talked about in the personal side, but small businesses don't even have a credit rating. So how do banks service them in their traditional ways? Well, they've struggled with that. They've struggled because it's hard to get small dollars out to small businesses when they aren't actually depositing money with them. It's hard to give money to a company that doesn't have financial statements that are relevant, you know, in the most recent month. It's hard to give money to a small business when, you know, the adjudication process and the data that you need to lend to that company is different than just how much do you have in assets and how much do you have in historical revenues and cash flows. That's the challenge. And so you have to use different data, you have to use different types of processes, and you also have to think about speed. Our customers there require capital today. Why? Because their fridge just broke down, and if they don't get a fridge or money to go and buy a new fridge for tomorrow, they don't open up their store. If they can't get capital to buy inventory, they can't sell anything. And it's about money and access to capital today. And so from a personal perspective, I'd see nothing more inspiring than entrepreneurship. And you know, of course, people like myself or Toby Litke or Mike Lazaretis or Rebecca McDonald, Peter Gilligan, all these people have great big stories. And they've built great big businesses. But the entrepreneurs that truly drive this country and drive Canada are the hundreds of thousands of Canadians who wake up every day to run their small business. They either do it because they have a vision or an idea to create something, or because they need to put food on their table. And that is inspiring to me, and it's also why it should be inspiring to every one of us. You know, and this group, the one thing they need is capital. And we need to change the pattern of how financial services as an industry has always wanted from them, but hasn't wanted to actually service the actual need they've wanted to give them. And so this is something that's really important that is driven us in many ways. What excites me as an individual today is that now, during this COVID crisis, it's never before have we seen so many people focused on the small business, their importance, from governments to banks to society in general. The importance of the small business is actually, they realize their role in the economy and their importance in the economy. And they also understand the criticalness of what they need in the simplest form, and that is capital. And they're focused on how to deliver that capital in the short term. But when I think about these businesses have been here, and we've known about it. We've known about the importance of them for a long time, and we've been supporting them for over 14 years. Yet such a time of urgency and importance, we're being ignored. We're being pushed aside, and we're being treated like a second-class actor, despite the fact that we know more about this segment of the economy than anyone else, and we know how to deliver them critical and urgent capital, and we all know how to do it in a way that's designed to get the capital into their hands using data that is relevant to their business, not just the way it's been done historically. But today, all we hear is this message of we can't use fintechs to support the small business and or the customer. And we need to change this narrative. The narrative needs to become why we need to use fintechs to support our economy. And it's never been more critical than today. I think that, when you think about the policy and the positive of this, there's a lot of reasons why this is important. But when I think about the policy from a positive perspective as well, as to why fintech should be a part of the programs for small businesses, one, we have greater reach and penetration to segment of customers that many of the banks just don't reach, and we have a lot of experience in doing this, and we know how to get the money into their hands in a surgical and a product efficient way. Second, we understand that SMEs need the capital in the short term, but need financial strength coming out of the crisis, not just during this support period, but coming out of the crisis. They need strength to grow and to emerge post-crisis. And it is in Canada's best interest to support fintechs because if you think about it, strengthening us now will only help build a better alternative financial services industry and a better banking industry for the long run. It also increases competition for the banks to get the capital, which we all know, looking at all the data, is not getting into the market as fast and as well as it should be. We need actors to get the banks to be pushed to increase their efforts to get the capital into the small businesses. I'm going to really enjoy spending the time on this. So thank you, Colin.
Oh, I want to get to the Q&A because you've just positioned us really well for this conversation, and I think you brought real life to the data that Andrew just showed us a moment ago about the difference in small business lending as a percentage of GDP when you compare Canada to G7 countries. So it's the fact that we're at the bottom of that list says something about the opportunities we're unlocking for small business. I'm going to hand things over to Senator Moncion for the Q&A period. And I believe at the very end of that, Senator Wetston is going to help us wrap up the session. So thanks to each of you for getting us started so wonderfully.
Thank you, Senator Deacon, and thank you to all our three guest speakers. It was very inspiring. Thank you for your presentation. So we will start the Q&A with Senator Wetston, who will be asking the first question. Senator Wetston?
Thank you, Senator Moncion. I want to thank the panelists for the presentations today and really appreciate you coming. I want to emphasize how important this area of activity is. And I emphasize it because I think it remains an area of activity that, frankly, difficult entirely for governments to totally comprehend. It's not just about regulation. It's not just about, well, I can get on the internet or use my mobile phone. There's huge innovation that really can progress forward in the economy from a number of perspectives, and you've sort of all addressed that issue from different perspectives. The question I would have for you is last week, and you may be aware of this, the Minister of Economic Development, Melanie Joly, announced as part of a $962 million regional relief and recovery fund, well known as the RRRF. I'm sure I have to throw that in. But I want to focus a little bit on the $57 million joint investment with the Government of Ontario to assist small business enhancing their online presence. Now, the reason I'm mentioning that, $50 million coming from the feds, $7 million or so coming from the Ontario government, and this is going on across the country. The reason I mention it is because we're talking about technology here. We're also talking about getting these small businesses to have a greater online presence. So it's not simply about what you can offer them from the point of view of your developments, but what they can do. And this is the government's role in this, to try and assist small business in developing greater online capacity. They also have a number of corresponding programs, as you know, and you've mentioned, I think Som has mentioned a couple of those in the sense of what the federal government is doing. We all recognize the importance of small business, its contribution to employment, jobs, obviously, and GDP. So my question is, can you discuss, and I'd like you all to potentially do this if you can you discuss how you have been able to support small business in Canada during the crisis? We're still in the crisis, not only to survive, but also to pivot towards economic recovery in the future. Happy for all of you to see if you can respond to that question, because I think it's important to understand the framework in which small business exists. Thank you.
I'm happy to kick it off if you'd like. So this is a really important. Thanks, Howard, for that question. I mean, from a business perspective, we have been in this business for a long time, so we actually have a deep already kind of loan book. We have a deep engagement with these customers, our businesses. We're live in this business, I'd say. So immediately in March, the first thing that, of course, we had to deal with was, how are our customers being impacted by the COVID and the shutdowns from the business perspective? So the first thing we did was any customer that was shut down or had their businesses revenues reduced, we actually put them on a payment deferral plan, 100%. And that had a really big implication. We're not a bank, as you know. We don't have the Bank of Canada behind us and repos and all the rest of it. We have our own capital. And, we had to sit down and make a hard decision. And that of course, had the impact of one thing of hitting our revenues and our business, but more importantly, also putting us at a pretty big imperil of loss. So the amount of customers that we put on. So about half of our customer loan book, we put on a zero payment plan. And that had a meaningful thing, because to us, being able to do that meant that those customers had the ability to survive, no matter how this played out. And we told them, we're going to keep doing this until you actually have a business that is earning revenue and you can actually start paying a loan back. So we've done this. We've actually been, over the last 90 days, still been managing it. The good news is that we've had our customers being resilient and innovative and thoughtful. And about half of those loans that we originally put on a COVID relief plan actually have come back to regular paying. And that's really positive. It means that they found new ways to go online, to sell their goods, to figure out how to build takeout into their business processes. And that's been really important. Second to that is that we've also been building the technology. One of our roadmap technologies is to build, call it financial operating system, virtual treasurer platform for small businesses. It's a little bit of what Andrew talked about for the individual. It's giving them insights that large enterprises have when they have individuals working around cash flow planning and managing their businesses' needs and accounts payables, accounts receivables. What we've done is built a technology to enable any small business, any size, to have those same insights, those same principles, and automated so that they can actually understand, if I have a payment coming up, when do I have to need capital? When do I have cash coming in? And to manage all of that from an automated perspective. And that enables these companies to actually think about how they can map out cash flow planning, which is something that small businesses generally have to do off a spreadsheet or on a Friday night at 11 p.m. as the owner is ultimately sitting down at the table finally to be able to do it. So these are the types of things that are important, but it is about not only helping them survive, and now it's a question of how can you help them thrive. And that part we haven't yet figured
out. Andrew, do you want to go next or do you want me to go next?
Go ahead, Janet.
Okay, great. So at Real Ventures, we have an active portfolio of about 100 companies that are, depends on how we categorize them, I would say they're all sort of small, medium businesses, most of which are growing very quickly, i.e. 100 to 200% year over year. In terms of how we worked with them, first of all, and I think this sort of re-emphasizes the importance of why technology is so important to Canada and why these firms are so important, is that they were very nimble and they were able to respond quickly. So the first thing that we did with each one of our portfolio companies was we understood the impact. What is the impact on your business, both short and long term, going to be? The second thing that we did was we said, okay, given that impact, given the new environment, as I said, both short and long term, what should the company be doing in order to maximize their business in this environment? And then third, to build out a plan to go after that. In many cases, not all, but in a lot of cases that involve cutting costs. But I think it's a huge testament to the entrepreneurs that we work with in terms of their mindset. Their mindset was never one of, we are the victim here, oh no, what are we going to do? They all had the mindset of, the world is changing, the world will always change, and it is my responsibility as a founder to figure out how I can capitalize on that, or how I can at least minimize the hurt. And so specifically, what am I talking about? I'll give you some examples. We have one portfolio company, it's called League. It's an employee health benefits platform. Within 24 hours, they rolled out a 90-day free trial of their platform in order to get enterprise customers into their pipeline and using their platform. Another company of ours so that was an example of pricing model change. Again, we've got other ones in that. Another example is companies that sort of pivoted their value proposition. So for instance, we have a company called bus.com, which traditionally provided busing and transportation to large live events. They have pivoted and are working with the healthcare space in terms of helping to transport healthcare workers. Other companies that have moved into from offline to online education space to take advantage of all of the homeschooling and distance education that's going on. So those are just a couple of examples, but the mindset and the work that we have been doing with our entrepreneurs is very much, hey, how do you pivot? How do you evolve your business given this new environment?
I'll just add very quickly. We're primarily consumer focused, but we know that many sort of the smallest businesses are run by folks using their own personal balance sheets as consumers to operate their business. And so I think some of the things we've done have been very relevant for that group. One of the features we just rolled out a week or so ago, and this is free, just like all of our credit monitoring is free. We've allowed our users to check, to confirm that if they've deferred a loan, like if they've deferred a mortgage or any kind of loan with their bank, they can check via Borrowell that it hasn't been improperly reported to a credit bureau. And because if it were improperly reported, it would be hurting their credit score. So it's a very small thing, a very simple thing. But for many consumers, you've deferred your loan. You want to make sure this isn't going to come back to bite you in a lower credit score. And so we very quickly stood up that feature and allowed our users to for free access that. So very, very helpful to the millions of people in Canada who've deferred mortgages or loans.
Thank you. Thank you. Next question will go to Senator Deacon. Colin?
Thanks very much, Senator Moncion. And I tell you, those answers, the customer centricity of those answers is what I love about the entrepreneurship and innovation space. I want you to speak to the biggest obstacles that you face right now, or the country faces in taking advantage of the small business growth opportunities that you see, and what we can do best to catalyze growth. I think it's been very clear through these presentations, we're at a pivotal point. We're at an inflection point that could go down or up in terms of the opportunities we've created. And so, Janet, Andrew, and Som, I'd like you, if you could, to just focus in on, how do we catalyze, how do we move that to the positive, but how can we remove some of those obstacles right now? Thanks very much.
I can start if you want. I would go back to, the types of things that I talked about. It is absolutely critically important that we continue the flow of funding for early stage technology companies. Canada is becoming known around the world for great technology companies. We have the opportunity to transform our economy to be much more technology driven, both in terms of pure technology companies as well as the ability to apply technology to our traditional industries. But we need to continue to invest in those businesses at the early stage. And I will tell you, I mean, Colin and I had this discussion a couple weekends ago, and I used this analogy. I said, you know, I get worried when people talk about, hey, let's not worry about the early stage, let's just focus on the sort of the scale-ups. And what I say is, it's like, hey, you don't look at your population and say, hey, we've got a lot of great PhDs, maybe we should just cut off the primary public school education, maybe just cut off the primary education because we've got enough PhDs coming out the other end. Like, it doesn't work like that. We need to keep the pipeline flowing. We need to ensure that we have the funding available for those early stage companies.
Yeah, I would just say, so I've been heavily involved with many different branches within the government. So Minister Mary Yang's office and her staff on how the small business space needs to be supported by fintechs, and of course their urgency and focus, and they've been very supportive of the need. Minister of Innovation, Abdi Baines, around the importance of technology and innovation in this space, and of course the Minister of Finance and their office around their oversight. And then, of course, with BDC and EDC, the two agencies that have been most focused on how to get, kind of support into the system. What I would say is that it's been a real struggle. We had our first phone call in the middle of March, the beginning of the start of the shutdowns, and immediately jumped on top of this. And over the last 90 days, we've seen very little progress, a lot of talk, a lot of conversations. And the biggest challenge I would say that it's kind of come down to has been around a very simple principle around regulation of know your client and anti-money laundering and processes around this. And unfortunately, this is driven by people not doing the work on actually understanding the challenge. This is actually, fintechs are meant to be, they are unregulated for a reason, and that's okay. It's not a bad thing. It's actually okay. And it's important to understand the differences, not just assume that this is a blanket, blunt assumption that fintechs are bad and unregulated is bad relative to good banks. And I think one of the key things is, in fact, if people actually look at the processes, we have KYC and AML that are some of the best in the world, very strong. We've been diligenced by two of Canada's biggest banks. They use our processes for delivering small business loans. They lend through us. We have several of Canada's biggest credit unions. And so we've been doing this for a long time. We probably have better results than many of the banks on this stuff. But it just becomes this kind of hurdle that someone throws out that says, because they're unregulated, we can't work with them. And that's a really negative thing. And I think the big thing we need to shift is my comment earlier. We need to change the narrative to, we need these actors. And as we've seen in the US, the UK, Australia, around the world, fintechs are being used as part of the solution. They're not being ignored, and there's no difference. And I actually would say that one of the challenges we face today is that we've gone from a space, in my opinion, that could be leading, could be trailblazing, to one that's trying to catch up. And I think that's a real problem that we face today. So I think there's really big reason and opportunity. There's one hurdle needs to just be, someone needs to focus on saying, we're going to tackle this and make it work. And that's really what it comes down to. It has to change the narrative.
I think from my perspective as a fintech entrepreneur, it really has been strange that there hasn't been more engagement with us as a community from the federal government especially over the past few weeks and months as this crisis has been gathering pace, because there's so much that companies like Som's could do, I think, to directly help small business. Another signal that I think was really unfortunate was just a couple of weeks ago when the consultations around open banking were delayed. It really seems to me like absolutely the wrong time to be delaying what is already a process where Canada's already behind. I mean, many other countries moved ahead with open banking. We're behind, which further makes it hard to do things like, ensuring data security, ensuring that consumers have choice. Those are all things that will come out of an open banking regime, and to have delayed that for a number of months, really I thought was very unfortunate, and just again was just another signal perhaps that there isn't the focus that there could be towards building a strong, robust fintech sector in Canada.
Thank you. I completely agree with you, and it comes from a former banker, but in the cooperative sector. Next question is going to go to Senator Mary Coyle. Mary?
Hello. Thank you to each of you. And actually, if I may, I do have a question for each of you, and they're different, slightly different questions. So I'll start with thank you for your intro. You know what your answer to Colin's question was about investing in those early stage technology companies. So don't forget and invest in the farm team. I get that. You spoke strongly about the Canadian advantage that we have with AI and with tech companies internationally. I am curious, you know, there's got to be people, countries nipping at the heels of this sector in Canada. Who are they, and what do you see as the opportunity cost, Janet, for Canada not taking this seriously now? So that's a question for Janet. Andrew, really impressed with Borrowell and Borrowell Boost. That is, I can see that being really critical, particularly now with COVID and people's personal finance situations being quite vulnerable. That cash flow knowledge and ability to adjust is incredible. You mentioned working with all the major financial institutions in Canada. I wondered if you could speak to us a bit about whether you work with credit unions, and really when you say the majors, what do you mean by that? My background many years ago was in microfinance. I used to run a Canadian NGO working domestically and internationally called Calmetto. And so I loved hearing from you, and that point that you made about the complacency and the supply-driven nature of our traditional financial sector is a really important one. And you talked about the need to push industry to be better, to change. So my question to you is, what kind of an impact do you think you've had on others? And then can you talk with us a little bit about the regulatory environment for fintechs in Canada? Can we actually have our cake and eat it too? Can we have that secure comfort that we like as Canadians and have a regulatory environment that unleashes the potential of the sector you're talking about? Okay, thank you.
Janet, why don't you start?
Okay, great. Thank you very much. Mary, thank you very much for your extremely thoughtful question. To answer your question in terms of who else is sort of nipping at our heels, Israel, for sure. I mean, I wouldn't say that's a new up and coming because it has been very strong for years, but it is a real tech powerhouse driven by a lot of factors, including the quality of the education that people receive there, the fact that the mindset of the entrepreneurs tends to be very focused and driven. And then I think the other thing from Israel is because they are, as one of my Israeli friends described it, hey, we're a small country surrounded by enemies on all sides. They very quickly in the company's evolution look globally and look to how they can sell. So Israel definitely has been a powerhouse, continues to do well. I think also, but in terms of the up and coming, we're seeing countries in Europe. So specifically, I'm thinking about the UK, France, and Germany. And we're seeing a lot more startup activity there. And both the UK and France, and I don't know the details off the top of my head, but I know both of those countries, their governments are being very active in terms of supporting the tech ecosystem coming out of COVID. They are really doubling down on investing in their tech companies there. So, I mean, if we don't, so then to get into the second part of your question, what do we lose? What is at risk here? I think we've got 5 or 10 years that we could lose if we don't respond. I mean, this is, I've been now 6 years in venture. I mean, the evolution of Canada over the last 10 years is incredible in terms of the growth of the tech sector. And it's a pipeline and we need to keep it going. if that dries up, in a couple of years, we'll find ourselves back at square one. Like, we need to invest now or we lose falling back to where we were 10 years ago. Okay.
Sure, I can jump in next if that makes sense. And thank you very much for the question. We really are a marketplace for financial services products. And the bigger the marketplace, the more products we have on there, the better a job we can do to connect consumers to the right products for them. And so, we do include the largest 6 banks in Canada on that marketplace. We have a great relationship with National Bank, for example, as one of those. But then we also work with organizations like Concentra, First Ontario, Meridian. EQ Bank was one of the founding investors in Borrowell. And so, we have really a relationship with lots and lots of different financial institutions and fintechs as well. We're very pleased to have products from many of Canada's leading fintechs on our platform. And, if you know of anyone else who's got great financial products for consumers that wants to put them in front of the right consumers, that's kind of what we do. We love connecting consumers to the right financial products for them. So we wouldn't, we would love to hear from more institutions. We're happy to play that role. So, if there's someone you'd like to send our way, please do. Really, our interest is in a robust, competitive system with lots of options for consumers and small businesses.
Yeah, and Mary, thank you for the question. I'll bucket a few comments there. So first is, financial services is an industry that can innovate, but it doesn't innovate in such a short window. So when you see innovation, it actually is kind of like the boiling frog, right? Like it happens in slow processes, but when you wake up 5-10 year increments and you look and say, "Whoa, the industry's changed a fair amount." And so, if you think about when I started my first company, Claymore, this is a time when, pre-financial crisis, fees and mutual funds and investment products were expensive and everyone was enjoying these fat margins. And I came at it and said, you know what, that's not going to make people make really great returns. And let me start this little, company and, banging on doors, telling everyone's story. And then, you look at the impact of that industry, that business now. The world has changed. Commoditization of fees, structural changes, all because of those decisions that I would have made and others would have made in 2005 timeframes. You look at today, you look at the world of, how financial services, wealth management, I look at what we've done at Wealthsimple. When I started that business with Michael Katchen, just over 6 years ago, 5.5-6 years ago, everyone said, "Oh, you're never going to make economics work in a robo world. How do you make money?" You look at it today, that business, it's about to get a major investment from a global financial player in the next short, we'll announce it. That business is now dealing with 1 million customers in this country. It is supporting them and has a roadmap to really change the way that people interact with small business, but with financial services. But their average customer has $20,000 deposited with them in an investment account. Many of their customers are saving and investing for the first time. So it's quite an amazing shift in the mentality. And look at the way the banks and everyone's responding. They're changing. They're acting. And that change is led by years of kind of resistance and then recognizing, okay, this is what we need to do to compete. And so that's why you need players to be constantly innovating. And that's not just in financial services, that's in every industry. When I think about the question around can fintech, can there be a best of both worlds? Absolutely. So we are the supplier, the supporter for banks. I mean, if you actually look at small businesses, it's not, sometimes banks actually kind of do want to provide small businesses support. It's actually very punitive for them on a capital perspective to lend in a unsecured microfinance way. They get penalized very badly on their balance sheet. So it's actually easier for them to lend through a firm like us to the marketplace as opposed to using their capital directly. It's also uneconomical. For example, we worked with National Bank, and National Bank did the work on their small business community, and they said, look, of every 10 customers that come in for a loan, we say yes to 1 out of 10. It costs us 2% to give a $500,000 loan or more, percentage-wise, it goes up significantly as it goes down. And it takes us 30 days to get the money into their bank account. They're using our technology. They were able to change that, just to give you the numbers, to going from 1 out of 10 saying yes to 6 out of 10 saying yes from their existing customer base. The cost of delivery being 45 basis points or less per loan, just to adjudicate, and you can get the money into their hands in 24 hours. And so you look at that innovation and that shift, and it's because you're working with a bank in their environment. Now, data sharing, and Andrew talked about it earlier, was a very big problem. So we had to actually license our technology into their environment as opposed to doing open banking, which is a different one that Howard and I have spoken about a lot. The principle, though, is fintechs need to, you can have regulation. And so, for example, the one difference between our AML KYC and a bank is we don't report to FinTrack. Now, that's just a cost, and we can do that. If the government said, you know what, go and report to FinTrack all of your AML KYC, that's an easy decision. The key would be have it done within the next 6 months. Don't do it tomorrow, because otherwise you're just going to slow down the process, because you have to build in the processes. But there are easy ways to migrate towards what would get people comfortable if that's what makes them more comfortable. But there's no difference otherwise. I want to say one last thing, which is really important, and this is actually a little bit of the comment question for Janet as well. I know this seems like a small decision right now to include, kind of whether it's technology players or fintech players in this space, but the ramifications of not doing so is so critical. And if you've ever heard about the butterfly effect, and this is effectively when we don't support our companies, but globally our peers are supporting their companies. So US companies are getting supported, UK and Australian, and they're getting stronger. And what you're going to find is over the next 5-10 years, they're going to populate our technology sector in Canada. And that is not just in financial services, that's going to be globally across all technology industries, or all industries. And that's a real fear for us at a time when we should be winning. And I think it's something we should all be understanding. This is a real decision that we have to make today.
Thank you all so much. So back to the winners.
Thank you. Next question is going to be coming from Senator Lofreda. Tony?
Yes, hi everybody, and thank you to our Senate team for putting this all together, and thank you to our panelists. I'm a former banker. I was vice chairman at RBC, so it's great to hear you. Great to hear the panel, and thank you for helping our small businesses, because we know that they're so important to our economy. We look at 42% of our GDP, and 48% of all new jobs come from small businesses, and so important to our economy. Now, if we look at helping small business make that digital transformation and help them build digital networks, and the question is to anyone on the panel or to all of you on the panel, what can the government do to help them build these digital networks? Anything specific besides obviously investment tax credits in those platforms? Any other creative ideas you may have in your world? And would the creation of a virtual market, a national virtual market, help? And I ask that question because do our small businesses have the tools to benefit from the creation of a virtual, national virtual market, or a virtual Main Street, if we want to call it that? Thank you.
Well, I would just start by saying, look, I think we have one of the greatest companies in doing this right now in Canada called Shopify. And, I think we should all be, proud of the fact that Shopify is an unbelievably important company. It's a leading technology company. I think it's, there's a lot of criticism of companies that get too big in Canada in technology space. I think that has the ability, in my opinion, to be a global powerhouse in supporting small businesses, medium enterprises, and large enterprises, and going online and building their own kind of, taking control of their own distribution and delivery of product. I think that the reality, though, is that they're one channel, and there's many different sources. Like, for example, the biggest challenge is not just going online for companies, but also there's many companies that, like a restaurant, that just has, their business is not an online business for the most part. They use things like Uber and other things to have delivery. But I think we can do more as a government to support these types of enterprises in, kind of changing and adapting and giving them the innovations, the back office support, the operational support to be better businesses and run their business more efficiently, as opposed to just, and then leave cash and capital for them to go and do unique things like innovate in kind of online or personal delivery, or take better economics of the share of online or takeout. I just think that, we have to recognize that there's many different platforms, and I think government, the one thing that small businesses always need is capital. That's their number one priority, is if they get capital, they're going to be innovative with that capital. And it's generally not just equity dilutive capital, but also non-equity dilutive capital. So it's all forms of capital is very important to these businesses. And so I just think it's really critical that what we've learned is when you ask a small business what they need, if you give an entrepreneur business capital for their business, they will effectively go and do some amazing things with that.
Anybody else on the panel? And and the reason I ask is we're talking about small business, and usually in the digital in the digital world, digital networks, you've mentioned Shopify, you either go big or go home, right? And it's very difficult for the smaller businesses to kind of benefit from all that. Although we are in an ever increasing global digital world, so it is a dilemma, I guess, as we move forward.
I mean, it's interesting when I think about, some of the technology companies that I see, and I personally meet with about 1,000 different small tech companies in Canada a year. A lot of tech companies are designed to solve that problem, right? It's interesting how many smart technology entrepreneurs are solving this problem, are saying, how can I help small, medium businesses get online? And whether it's, as you say, Shopify is one company on extreme, but there's all sorts of companies that are saying, how can I help these companies, whether do Facebook advertising or location services, or making sure that their webpage shows up online, things like that. So there are businesses out there. I think that we've got to make sure that those small, medium businesses survive, and then that we're connecting those companies with the independent small medium business. And I think that one of the challenges with small medium businesses is they're just time strapped, right? And how do you help those people get out from working on the day-to-day, I'm in my store, whatever, to actually have time? And so to think about, okay, like if I'm working 15 hours a day just trying to keep the lights on, when do I have time to think, how can I move the business forward in 6 months? And so I think it's maybe it's a tax credit, as you say, it's something that can incentivize them to say, hey, this makes sense to just take the time you need, because as I said, there are companies out there that have technology solutions that can help these small, medium businesses, but they need to have the mind share and the time to find those solutions and to implement those solutions.
Yeah, and Tony, I would just say, if you think about a program that was really, really impactful, like the VCAP program that was originated many years ago, and how that helped turn the venture capital industry at a very important moment when it had a little bit of a history of kind of challenge in Canada. And the government stepped in, did something very important, and brought others along with them, because they said, we're going to be there and others can come on top of us. And you think about the progress that has had in supporting, technology, entrepreneurship in this country. It's really important. Those types of programs are really, really critical, and more of those types of innovative programs. But it's got to be done at all stacks. I mean, we can think about how do we create the next major technology company, but we can also create a lot of really unique companies. A great company that was supporting small businesses like Wave Accounting, really great company, really doing some important things. But guess what? It got bought by a global player. Why? Because they couldn't actually make it work in Canada, from Canada alone. So they sold to a global player. And my opinion is we need more capital to support those great ideas and those great entrepreneurs. I believe in entrepreneurship. I think many of you would too. Entrepreneurs are resilient folks. They will find the great ideas, great opportunities, whether it's to open up a store in a corner of a town, or if it's to create an online business that will then thrive globally. They'll find great ideas, but they need access to efficient capital to do that. And the government stepping in the VCAP was really important in turning around the venture-oriented capital source. I think that was a really important thing. I think the BCAP program, to be honest, on the same vein, will have a similar vein, but has to get to those small businesses as well.
I think you said it well. We're great in Canada in putting money into research, but sometimes we have to learn how to better turn that research into money. And a lot of the surveys that I've looked at, not to mention one firm over another, a lot of the entrepreneurs wanted to be bought out. Their main dream was, where's my out? I want to become a multi-millionaire. I want to be bought out and through this startup. And you probably have those numbers a lot better than I do at this point, and I don't have the researchers in front of me. But anyway, thank you for your answers.
Yeah, I would just say one thing is in terms of that, mindset. There has been a significant shift in the last 5 years amongst founders. And 5 years ago, I would say, yes, that was a lot of entrepreneurs were of the mindset, let me cash out when I can make a few, however many million, call it $10 million and buy my cottage and I'll call it quits. And I have seen, as I said, with over 1,000 founders every year, a very distinct shift. Part of that was driven by Shopify and other success stories where founders are no longer saying, I'm in here to make my $10 or $15 million. What they're saying is, I'm here, I want to be the next Shopify. I want to take my company public. I want to be the company that everybody knows. I want to change. Yeah. And that is another reason why I am so bullish on our Canadian tech ecosystem, and why it also speaks to the fact that, success begets success. The more success an ecosystem has, the more success will follow. And whether it's because of the mindset or because you're training people. And that's why Silicon Valley historically has had that success. It's why Israel has seen the success. And now Canada has reached this tipping point where we are seeing the success, where we are seeing people who, quote, grew up in a Shopify or Lightspeed or one of these other companies. And they are going back, they're starting their own business. We're seeing repeat entrepreneurs. And why I'm so passionate, now is the time we've got to step on the gas and keep that innovation going, or else we risk sliding back. And it's either going to be a negative spiral or a positive spiral. And we've got this great positive network effect, this positive spiral, and we've got to keep it going.
Well, it's great to hear that. And I'm looking forward to seeing those surveys that tell us that. So thank you.
Absolutely.
Mr. Graham, did you have something to add to the conversation?
You know what, we had great answers from both Som and Janet. I'm happy to let's make more time for other questions, and I'll jump into the next one.
All right, thank you. Next question is going to be coming from Senator Deacon. Colin?
You can't get rid of me, guys. I'm having the best afternoon I've had in a long time. I just this topic area just it makes my heart sing. Last week in the Globe and Mail on Wednesday, there was a report that about 1% of our co-loan, proposed $20 billion co-loan program has been lent out so far by the chartered banks. And I'm challenged with what Som was speaking about, Andrew, what you were speaking about, the fact that our Minister of Finance right now we've been slow to deal with the consumer-directed finance or open banking issue in Canada, and that's now being used because Finance Canada was slow, that's now being used for a reason to go slower when the world is sped up right past us. And we've got Canadian financial fintech loan companies, Canadian fintech loan companies that are being used by the Small Business Administration in the United States to deliver their COVID relief. So I'm actually want to go a step beyond the butterfly effect that you spoke of, Som, and each of you to step in, and maybe Andrew, you want to start because we didn't hear from you last time, and get to Som and Janet and their thoughts on this as well. I'm worried a little bit about the risk of Canada, the anti-competitive risk of Canada, where we weaken our entrepreneurial ecosystem, and we have all these great companies and great talent that now is at risk of having to be bought out, when we've just got that cultural shift that Janet just spoke about that's happened, where people want to go after the world. They don't want to have a base hit. They want a grand slam home run that they work at over a decade or more. And we're setting ourselves up right now to reverse this democratization of our economy that's been happening, and have it just collapse in to much larger organizations, really concentrating far more than they have in the past. If you could just speak to that, each of you, thank you.
Yeah, I think it's a really great point, Senator. I think we've certainly had an approach to innovation policy in Canada in the past that may have been successful in some ways, but could be so much more successful. And when you look at how other countries look to foster innovation, and one of the ways many do that is by turning to innovative, fast-growing companies to deliver government services and programs. And I think it's a big missed opportunity that we haven't done that so far with the delivery of small business lending in the current crisis. And I think it's important to understand, I think this isn't only a missed opportunity for, to grow an even bigger and stronger fintech cluster, which again, I really think as a country, we should be winning at. We have a right to win in fintech because we have strong banks and we have strong tech companies. We should be winning globally in this. But that's not the only reason that we should be behind fintech. If you want a strong banking sector, let's say that for whatever reason, fintech on its own isn't exciting to you. If you want our banks to remain strong and competitive, if you want the RBCs of the world to remain strong and competitive, I believe they need to exist in an ecosystem where there are innovative technology companies at their doorstep that they can collaborate with, that they can partner with, in some cases they can acquire. And I think that's really important for the long-term success of the Canadian financial services sector. And that's another reason why I think everybody on this call should be concerned, or we should all be concerned about a lack of support for domestic fintech, especially compared to the kind of support that US players are getting. And it's certainly going to be a sad day when we read about additional Canadian fintech companies being scooped up by American counterparts who have grown bigger and stronger through this crisis.
Yeah, I couldn't agree more with what Andrew just said. I think what we all have to understand is that there's an evolution to entrepreneurship and kind of innovation. Big companies, they are big. They were once, small, and they became big because they're great at many things. But one thing that they generally struggle with is innovating in-house. And so what they generally will do is they'll partner with third-party organizations. They'll acquire third-party technology and R&D and businesses to help them drive their innovation agenda. And it's a standard thing. It's a very important thing. It's in every industry. But the problem with what we have right now is that the banks rely on the economic development of fintechs to drive innovation agendas, one, to push them, as we talked about earlier. So, when I look at something that we've done with Wealthsimple, if we hadn't driven that business, then many of the banks wouldn't have offered their own similar technology solutions or digital onboarding. Like I was talking to somebody the other day about, they were onboarding a bunch of new customers in the wealth space, and they were sending them packages of signing docs in the COVID environment to sign and send back to them. Whereas if you go to a Wealthsimple, they do it in 5 minutes and you can have an account set up. And now the banks are pushing themselves, the regulator pushed themselves to actually just allow for digital onboarding as a concept that the banks will now start to deploy, and this will become normal place. But if you didn't do this, if Wealthsimple didn't exist, then ultimately, the banks wouldn't have been pushed to build this technology themselves. So I would say that it's really important that we have this not only to drive the banks to be better, but second is once the bank has recognized that they're not going to do it themselves, they need to partner or they need to acquire. The problem with if they look at buying US companies or they buy global companies, well, those companies aren't set up to support the Canadian economy. And so it's a lot easier and better when they're buying Canadian homegrown businesses to support the Canadian consumer. And so I think it's a really big virtual cycle that is created, as Andrew talked about. Second is I will say that, look, I think if you look at just the lending space, just in what we're in, one of the challenges, of course, is that, just like ourselves, like globally, the global fintech lenders have been struggling because, a lot of us have put our books on deferral plans, cut revenues, done all that stuff. But by having US players and global players participating in government programs, it's given them a sense of purpose. It's given them a sense of value and creation. Immediately post, I'll give you an example. One of the UK players is a peer of ours globally. Immediately post announcing that they got into the government programs in the UK, they immediately called us to say, we'd like to acquire you. And so why? Because they saw this as they're now more valuable and they can take advantage of the weaker players. This is going to happen. And in 5 years, it's going to hollow out a large part of our players in Canada if we don't participate. So I just think it's real. We have to understand that this is how things change. And the decisions we make today result in meaningful change 5 and 7, 10 years from now.
Thank you. Ms. Banister, do you have a comment or do you want to add to the conversation?
No, I think that's good. I think I see it looks like there's another question. So given the time, I would suggest that we move on to the next question.
All right, so the next question will be coming from Senator Wetston, and he will also be concluding our meeting. So Senator Wetston, Howard?
Thank you, Senator Moncion. You've covered a lot of territory here and interesting perspectives from the perspective of trying to understand the challenges of small business, but also the challenges of fintechs in Canada. I want to raise an issue with you. In my experience, much of the discussions have been around, let us say, federal regulation. When Som talks about challenges around thinking capital and the ability to be more engaged, it's around banking, more or less, or federal finance, or officials of that sort. But purpose is regulated provincially. Wealthsimple is regulated provincially by securities regulators. It's always been my belief in looking at our federal system of provincial and securities regulators, of which there are 33 in the country, by the way, in total, when you look at pensions, insurance, and securities and banking, that the sort of banking sector is very focused on risk minimization. Securities regulation, although it may not appear that way to you, is very focused on risk optimization. There's a big difference in how they view markets. You may not see that in your everyday work. It's always been my belief that's the case. We experienced that in the financial crisis. It was obvious to me that this was a different approach to markets. The reason I'm asking this question is this. The obstacles, much of what you discussed, less so I think from Janet's perspective, but the obstacles that are discussed pretty much from Andrew's to some extent in yours, Som, tend to be government obstacles, whether it's by way of regulation, the inability to understand, the inability to support these initiatives. And I just want to ask you if you could respond to that very quickly. Do you see that as the major obstacle? Because I can't disagree with you. The most important thing for small business today is cash, liquidity. They need money to survive and hopefully grow into as we move out of the crisis. Any comments on that?
I would go as far as to say, Howard, that it's the only obstacle right now. And I say that because, and it's not a criticism, because, as I've said, like, I think the government has done a phenomenal job of at swift measures of decisions to get, kind of capital and support all the different branches and support of the economy. But this to us is an important piece of the decisioning, and it's being kind of pushed aside. So I think it's actually the decision. When we think about the regulatory structure, how could you create frameworks for future regulation of fintech? I agree where you were sort of going towards, which is maybe how the provinces could play a role. Some of the sort of independent regulatory bodies that we have so many of could become different actors. It doesn't have to just be OSFI, for example. And so there are different ways to solve it, maybe provincially, with provincial regulators, to give comfort or to provide call it the validation that maybe the federal government needs. But ultimately, right now, this is I think a federal response that needs to be addressed, and that's really the challenge.
Thank you.
Yeah, I mean, it's Andrew. I think I certainly agree with that. I think the federal government's really the main actor here for the current crisis, and also when it comes to much of the broad regulation in the fintech sector. I think the federal government's got an overriding role to play. Open banking being a great example. Like, that really is a federal government-led initiative that will then create an environment, an ecosystem where all fintechs and banks and other actors in the financial system can work together more efficiently and compete more efficiently. I think, look, there's of course roles to be played by the provinces, and I think it remains a challenge in certain instances that different provinces have different sets of regulation in different parts of the financial services space. We've had to limit the rollout of Boost in a couple of provinces that take a different approach to lending, for example, or take a different approach to what we're doing with that product. So if there's not uniformity, and that of course creates its own challenge, and that's been, I guess, a challenge for as long as Canada has been Canada. But to echo what you said and what Som said, the key actor here we need to be focused on is the federal government.
Any comments, Janet?
No, I think it's more of a fintech question, so I'll defer to those guys.
Well, thank you very much. Senator Moncion, do you want me to wrap up very quickly?
Please do.
Yes, thank you. I don't know if I can do it quickly. The one thing I can do, of course, is to thank our panelists and thank you all for joining us today. I want you to understand how important your contributions are and how important what you do is critical to how our economy evolves. I'm a little bit concerned from some of the conversations that there is a bit of a risk-averse approach that we see from the federal government today with respect to allowing fintechs. I just also want to say fintechs also occupy a provincial regulatory space as well as a federal, potentially in the areas that we are thinking about. And I say that only because I think we've had different results, not necessarily the most positive in some situations provincially and certainly federally. I believe what you're saying is this is not just a COVID-related matter. We recognize how important a digital strategy is for small business. I think we all recognize how important small business is to Canada. We also recognize how important it is to evolve and to ensure that technology is used as a tool for innovation and a tool for growth, and not simply create innovative opportunities for others to acquire and to remove from Canada and its opportunities. And I think you've all mentioned that. You know, Andrew, when you talk about small business, or we talk about families, families run small businesses. So some of the work that you do is so critical to so many families because they are full of so much anxiety and uncertainty brought on by the COVID crisis, and we all recognize that. So it's really important to take some things away from this. And one of the most important things is to try and understand the obstacles that you mentioned today with respect to the need for governments to rise above any uncertainties or risks that they may have with respect to allowing for innovation to continue to occur in the economy. Open banking is a good example. The Senate produced a very positive report with many recommendations to government, and it's sitting on the mahogany shelf and out there for more consultation. To me, that's negative. It could have been used as a tool to advance technology and opportunities and could have been an effective tool during COVID. So I really, without going on much longer, I would say that it's really important for us, for the Senate to take away the learning and understanding here of technology and innovation, how important it is for Canada, how important it is for jobs, how important it is for GDP growth. And once again, I thank you so much for your contributions today. And we hope we can continue this dialogue into the future.
Thank you very much. Thank you for having us, everyone. It's a real honor.
Yeah, thank you very much. Really great to be here.
Thank you so much. It was fantastic all the way around. Great presentations. Thank you. And thanks for just informing our group as to the exciting potential that sits in front of us. Thanks.
Yes, thank you so much. It was
Colin,
really,
thank you
really
very much.
interesting.
Colin, thank you very much for organizing it.
Thank you all and stay safe.
Yes.
Okay. Thanks, guys. Bye.
You too.
Bye.
Bye-bye.
Thank you.
Thank you.
Bye-bye.